I want to talk to you about everything you need to know about emergency loans. The thing is that when you are looking for an emergency loan, you got to really pay attention to the lender you want to apply at, right? Whether you have a bank or a credit union or online lender, you have different setups, okay? So that's number one. Number two, you have to understand the loan proceeds because lenders really care about the use of loan proceeds. So if you say emergency, it better be an emergency, okay? So and the third thing I want you to pay attention to is your ability to repay the loan because simply getting an emergency loan, it's simply saying, listen, I want to apply for an emergency loan without thinking, let's say prior about the your ability to repay the loan is actually is not a good move. So think about your ability, think about your capacity to repay the loan. For instance, if you want to apply for a 25 grand emergency loan, big question is 25 grand over 5 years, you might probably have to pay $500 or $700 a month. Can you afford such a payment? Can you afford this payment in addition to your existing lineup in terms of expenses? So those are things you need to really think about. So overall, what you have to remember here is that emergency loans can help cover a wide range of unexpected expenses when you don't have savings, right? If you maybe you have savings but not enough savings, okay? And so when it comes to emergency loans, you have to understand that you have different types of emergency loans, including installment and revolving options. So basically, you can choose to have an emergency line of credit or an emergency loan. So if you have an installment loan, that's just a regular loan, like you have to pay every month or whatever. But when you have a revolving line of credit, you have more flexibility. Now, personal loans and personal lines of credit offer lower interest rates and more flexibility. Okay, whereas payday and title loans have higher interest rates and but they have a higher approval rate. Okay, so you get approved faster, but you have to pay also a lot in terms of APR, but also in terms of closing fees and all those extra fees to really think about. So for payday and title loans, please use them as a last resort. Don't actually like you want to really go through traditional loans first before going for those loans. Okay, those payday loans. You want to evaluate the benefits of each loan type to determine the best option for your specific situation, especially if you are looking for a high emergency loan amount. Like if you're looking for anything like above 5 digits, for instance, then you really want to pay attention because the cost, the APR can be really big. So when you think about emergency loans, let me first talk to you about let's say installment options. See, the thing is when you have emergency loans, I think I've said this before, you have the possibility to get emergency lines of credit or emergency loans, right? The big question is which one should you go for? It really depends on what you're looking at. It depends on the type of funding program that can fit your budget. For instance, when you think about the emergency loans installment options, you have personal loans, right? Now, personal loans are actually pretty good. I mean, personal loans can actually help you in a very emergency, like an emergency scenario, up to $100,000. That's really good. I mean, you don't have a lot of lenders that can approve you all the way to $100,000, but you do have three or four. I mean, if memory serves me correctly, you have Wells Fargo, you have True, you have what is the online arm of Truist? That's another one. You have Wells Fargo, you have Truist, you have, I mean, not Truist, but the online arm. You also have another online lender that can give you $100,000, and finally a credit union. So you don't have a lot of options here, okay? But it's important to know that you do have the possibility to get a maximum of $100,000, okay? But the minimum personal loan for emergency you can have is $1,000. $1,000 is pretty easy. Anything below 5 digits, anything below 10 grand it's relatively easier. Okay, you can get your emergency loan at credit union, credit unions. You can get your emergency loans at your traditional bank, at your regional bank, at your local bank. That's pretty good. Okay, or you can go to an online lender. So you have online lenders are actually pretty good. They have actually they have entered this space really, really big time. So that gives you lots of possibilities. Okay. So if you think about emergency loans and you're looking for installment options, try all those lenders that I just told you. And but go for if you have to choose which one you should go for. Finally, think about price. I mean, think about the APR. Think about the repayment window, and most importantly, think about their terms and conditions before granting the loan. So when you think about emergency loans, you also need to think about payday loans. Okay, so besides personal loans, you have personal loans and title loans. Now, one thing I want to say, I think I've said this before, but I feel like I have to repeat it. Please, before you go for payday loans and title loans, make sure you have exhausted all other options because payday loans can be very expensive, very, very, very expensive. You're speaking about triple digits APR. Okay, that's kind of crazy. And so the thing is that you want to try all other lenders. And if nothing works, as a last resort, go to payday loan providers. Okay, but the thing is that payday loans are small emergency loans of up to 500 or sometimes 1,000, even if you're lucky, $5,000. Okay. But payday loans are usually made by storefront lenders. So those are not like, those are not your nationally known lenders. Okay. No, those are, local storefront lenders. And, payday loans must be repaid plus fees by your next paycheck. Okay. And APRs can exceed 400 to 1,000%. Okay. So this is really, that's what I was just telling you, that the APR can be really high. And most payday loans don't require a credit check, as loan approval is based entirely on your earnings. Okay. And many states consider payday loans to be predatory and regulate them heavily. Okay. So thanks to their short repayment terms, many payday borrowers end up needing to borrow a second loan to repay the first, getting trapped actually in a cycle of debts. Okay, so payday loans should only be used as a last resort. And again, I think I've said this before, you have to exhaust all other options. Okay, so the same thing for title loans. It's the same, let's say, a cautionary statement. Okay, make sure that you have tried everything else, and if you can't really get your loan elsewhere, then go for title loans, because a title loan is actually a secured installment loan that uses your vehicle as collateral. Okay, now if you can typically borrow 25 to 50% of your car's value with repayment terms of 15 to 30 days. Remember, the car has the lien, like actually there shouldn't be any lien on your car, right? In other words, for you to use your car as collateral, you got to really own the car. So the car has to be free of any I would say any lien from the lenders, because if you're still paying your car loan, you can't use it for title loans. Okay, so title loans actually may be easier to qualify for at lower rates than payday loans, that's for sure, right? But one thing you need to understand is that you must own the car outright, and you could actually lose your car, because if you don't really pay your title loan, they can actually repo it. They can repossess the car. So that's actually for installment loan options, right? So in terms of installment loan options, you have personal loans, you have payday loans, and you have title loans. Now let's talk about the revolving options. So if you're looking for an emergency loan and you're looking for a revolving option, you actually have two main options. You have credit cards and you have personal line of credit. Personal lines of credit. Big question is, which one should you really choose? Should you actually have a credit card, or should you go for a line of credit? Now, when it comes to a revolving line of credit, remember that revolving credit in general impacts your credit score big time. And the impact happens through something called CUR, your credit utilization ratio. And what you want to do is that whether you get a credit card or a personal line of credit, you want to keep your CUR under 25%, under 30 to 25 to 30%. Okay. This will help you boost your credit score, or at least maintain it at the current level. Because once your CUR goes above 30%, what happens here is that your FICO score will go up. There is an inverse, there is a negative correlation between your CUR and your FICO score. What I'm trying to say here is that if your CUR goes up, your FICO score will go down. So if you do not want to really reduce, if you do not want to decrease your FICO score, make sure that you don't increase your CUR. And so that means what? It means that if you're applying for an emergency credit card, make sure that you get a higher limit. Now, of course, you don't control the limit they give you, right? But at least you have the possibility to ask for a larger limit. And the way you ask for a larger limit is by showing your income during the application process. So the credit card provider knows that, oh, you have some kind of income, right? Just don't apply blindly, because if you apply blindly, you might get a very low credit limit. So if you want to really impact the credit limit decision, make sure you put your income actually prominently in the application process. Same thing for the personal line of credit, okay? Because a personal line of credit gives you the same flexibility as a credit card, but rates are typically lower than credit cards. And payments are based on the amount you borrow, and the line can be paid in full and reused, okay? So basically, the thing is, credit cards, as you probably know, credit cards sometimes don't allow you to withdraw cash. So if you have a personal line of credit, you can withdraw cash, okay? So this is kind of cool. And most lenders cap personal lines of credit at $20,000, which is much less than the $50,000 average that you will find with personal loans, right? So this is something to really think about, especially from a flexibility point of view. So if you think about emergency loans, you got to really ask yourself, how do I go about choosing the right one for me? Because every situation is different, right? Every condition is different, and your situation will impact the kind of criteria you have to fulfill before getting the emergency loan. Now, the thing is that the way you qualify, the way you choose an emergency loan will depend on whether you go for an installment loan option or a revolving loan option. So basically, if you're looking for a personal loan like an installment loan option, you want to go for that type of emergency loan. If you need all the funds immediately and at once, you want to spread the payment out over several years. You prefer a fixed payment and interest rate, and you need to borrow between $1,000 and $50,000. So this is kind of cool because it gives you more flexibility, okay? And so that's for a personal loan. And when it comes to a title loan, for instance, again, I'm still talking to you about the installment loan options, okay? So title loans, if you own a vehicle with a free and clear title, if you're confident that you can repay the loan quickly and understand the risks involved, because remember, if you don't pay your title loan, you might lose your car because the lender will come in and repossess the car. So be very careful there. And if you don't qualify for a personal loan, you could also try to go for a title loan. What about payday loan? So payday loan, actually, if you can actually think about this option. If you don't qualify for a personal loan or let's say a title loan, you can actually think about a payday loan, okay? Or let's say you need around $500 or less to pay for essentials, and you are certain that you can repay the loan by your next paycheck without needing to borrow again and again and again and again and again, okay? When it comes to credit card, if you want to use a credit card as an emergency type of funding, just remember that a credit card is a little different. The setup is a little different. Go for an emergency credit card if you don't need all the funds right away. If you want to split the cost between cash and credit, if you don't need to max out your card to pay the bill, and you have a lot of available credit, right? That's what I said to you a little earlier, that you want to have a higher limit because you want to increase your CUR. And you want to go for a personal line of credit if you don't need, let's say, more than 20,000 or 25,000, or in some cases 50,000 maximum. If you need to, if you don't need all the funds at once, and you will have ongoing expenses related to the emergency. So that's kind of important. So let me talk to you about the thing you need to keep in mind here is that if you go for an emergency personal loan or emergency let's say a revolving option, you have a few things you can use the money for, right? Now, the lender will ask you, there is a section called use of loan proceeds, where they will ask you emergency, what kind of emergency are you going to use the money for, right? And when it comes to that, every situation is different. You're not going to find, like, I can't tell you, oh, here is a standard reason to give on your application. No, but based on research, the kind of emergencies that get approved for loans include medical bills, car repairs, home repairs, and everyday bills. Again, every situation is different. So what will be an emergency on my medical bill may not be an emergency for you, right? So an emergency loan can cover the cost of an ER visit if your insurance policy doesn't foot the bill, because or if you're not even insured, okay? Okay, that's an important element. So, or if you do have insurance, but the deductible is high, you can use the loan proceeds to cover the out-of-pocket cost. So this is something important to really keep in mind, especially from a flexibility point of view. So besides medical bills, you also have car repairs. So unexpected car repair costs and alternative transportation arrangements can be really costly, especially if the repair takes several days or weeks, okay? But an emergency loan can cover the expenses needed to keep you mobile, especially if you need the car for your job, for instance, okay? I mean, there are some jobs where you can't really just commute. You can't just take the train. You can't take the subway, whatever. You need to really drive. Like if you are a salesman, let's just say a salesperson, and you need to actually go from door to door, you will need to have your vehicle. You can also think about emergency loans or emergency lines of credit for home repairs. So an emergency funding program can help you keep your home in optimal shape when systems break down, and the cost of home repairs vary greatly. Okay, so but one thing for sure, a home advisor, which is a research platform, estimates that basically home repairs can range from 4,000 all the way to $26,000, depending on your zip code. You can also have everyday bill actually becoming an emergency. So a sudden job loss or reduction in hours can also warrant the use of an emergency loan to cover living expenses and other necessities. And this is an important element to really keep in mind. So the bottom line here, if you think about emergency loans, remember that you have a few things to really think about. Number one, you got to ask yourself, what type of loan are you looking for, right? Because the type of loan you're looking for will direct you to the lender you should be actually applying at. What I'm trying to say is, when it comes to lenders, you have online lenders, you have credit unions, you have banks, you have alternative lenders, you have CDFIs. So CDFIs, those are actually nonprofit lenders, okay? So the question is, depending on what you want and how much you want, by the way, how much you want also is important. If you're looking for a 10 grand emergency loan, you're not going to talk to the sim lender if you are looking for, if you are looking for $100,000 emergency loan, okay? By the way, like I told you a little earlier, you don't have a lot of lenders who actually will give you a $100,000 loan, whether it is for emergency or not emergency. By the way, the truest lending arm that I was thinking about, I was referring to is Livestream. Livestream, I finally got it. So it's Livestream. So Livestream will give you a maximum of $100,000, and you have Wells Fargo. Also, you have a Consumers Credit Union. And you finally have you have SoFi. So those are the four lenders that can give you a maximum of $100,000. I call them the 6 digits lending club. Okay. So one thing I want to say here is that all this is kind of cool. Okay. The paperwork, you can really work on the paperwork, but most important thing is that look at your ability to repay the loan, because it's easier to get the loan that you want if you're able to show the lender that you are in capacity to repay the loan, because the lender will give you whatever you want if you can show him or her that you are making enough money either through your job or through your investments or through your business, to you're generating enough cash flow to be able to really cover the outflows. Okay, you're generating enough inflows to cover the outflows that'll be generated with the loan that you want to have. In conclusion to this conversation, I spoke to you about everything you need to know about emergency loans, and I spoke about the installment options, but also the revolving options. Thank you so much. God bless you. I will see you next time. Until then, remember, stay marvelous.